Hello and welcome to VOP Business. I am Kayla Abraham. On the show today, attention will be on the hottest stories coming out of the economic space. What's made headlines and what's big enough to be brought to you at this time. We will tell you today that the presidency has responded to a report which says the president is about to leave the country at its highest inflation in 17 years. The report said the headline inflation rate has climbed from a single-digit point it was when President Muhammadu Buhari assumed office in 2015 to 22.22%, the highest in 17 years. A statement released by the president's spokesperson Garba Shehu said the stubbornly high inflation is a worldwide problem and no nation is immune to it since the global economic downturn triggered by the COVID-19 pandemic. He listed France, the United Kingdom, Pakistan, Turkey, and Ghana as some of the economies currently bogged down with high inflation. Whereas COVID-19 indeed triggered runaway inflation and the war in East Europe turbocharged it, prices are scaling down globally. But Nigeria's inflation continues to trend upward. To get more insight on this, we're now being joined virtually by barrister at law friend Nzako. Mr. Nzako doubles as an economic analyst. You're welcome, sir.
Thank you, Sarah, and afternoon, and good afternoon to all our esteemed listeners and viewers.
Good afternoon, sir. Shehu,
Thank you.
Yes, Garba Shehu said the stubbornly high inflation is a worldwide problem and no nation is immune to it since the global economic downturn triggered by the COVID-19 pandemic. Could this be a major reason for the rise in inflation, if I may ask?
Yes, I agree that the global pandemic occasioned by COVID-19 actually affected productivity all over the world and prices generally. It affected prices because people had less opportunities to produce. Factories did not work for some period, and the productive sector could not achieve the usual milestone on account of the pandemic. And naturally, when it led to a reduction in the quantity of goods and services available for consumption. And naturally, it led to increase in prices because inflation simply means, in layman's language, in elementary definition, as a situation where so much money is chasing very few goods. In which case, when the money supply is much higher than the supply of goods and services, the natural tendency is for goods and services prices to go up. And when they go up, that is what we call inflation. So in the event where COVID-19 did not allow for sustained productivity all over the world, the goods in the stores, the goods in the warehouses continue to be diminished. And while they continue to be diminished, the prices of the available continue to increase. That is one thing. But it's not only the COVID-19 issue that led to inflation, the terrible inflationary trend in Nigeria.
Yes, sir.
Because after all, the question will be, what has even been our productive level? Most of the goods we consume are imported from outside Nigeria. So what it means is that once international productivity has been affected in industrial centers and industrialized countries, it will affect us here who are major consumers and major importers of these consumables. So yes, that is one, but we must also go beyond COVID-19 to look at the causes of the inflationary trend, which had refused to go down matter of fact, has peaked the highest in the past 17 years,
Yeah,
as you said in your
Barrister,
prologue.
I was even about to ask. I mean, are there no other prominent factors that contributed to this? Is it just the COVID-19?
There are many other prominent factors. Some of them are international, but large chunk are domestic. You recall that the problems we had, which has spiked up our inflation, is poor economic policies, both in terms of conceptualization and in terms of execution. We have had series of very badly conceived policies in the administration of President Muhammad Buhari. And such poor conceptualization and implementation of policies have affected our prices, have affected the value of the naira, and has led to very bad inflationary trend, which we experience and have been experiencing for the past 8 years. Nigeria had gone into recession. And why did we go into recession? Basically on account of such bad policies and also on account of our continued decline in productivity. Nigeria had sometimes closed its borders against other West African countries, and they denied the economy the opportunity of economic interaction in the West African sub-region, where we are ordinarily supposed to be giants, economic giants. The closure of borders of Nigeria, especially on the southern flank of the Nigerian territory, has adversely affected economic interaction and economic activities with our West African neighbors. And of course, with our low level of productivity, it affected our prices. The next thing that affected our prices, which led to inflation, is the lack of security, the incessant insecurity that had bedeviled Nigerian economic productivity. The farmers could not go to farm. Other basic economic activities, economic activities could not take place on account of insecurity in the land. People could not even contribute to domestic productivity in terms of the agri sector and even the mining sector. We could find out that because of that insecurity, even those in the construction sector, their value of the construction had gone up because they needed to provide extra security for their construction staff. All that will go into price increases. When you could not go far to farm and you could only farm within the precinct of your compound and your environment, it naturally reduced the output. Agricultural output reduced so badly and it affected prices. Even while that has been going on, there is this terrible practice of collecting tolls from people who transport agri products and byproducts from one state to another. If you load a truck with oranges from Benue State, for example, heading to Lagos, at every state, the truck driver will be expected to pay some toll before they pass. They call it, some states they call it agri-produce tax. In some states they call it quarantine tax. They give it all manner of names to the extent that it is even abused by some local government authorities that unleash mayhem on the roads against those who transport agri products. All these things add up to the costs at the end of the day of all these products. And because of poor energy provision, electricity, unsustainable, unstable, and very high cost of electricity, it has also value addition in the agri sector, to the extent that the things that are supposed to pass through primary industrial process are now exported raw. All these things add up to high prices and add up to inflation. So when you now bring all these things together, you now see that not only that we are affected by international trend of COVID, we were also affected by our own domestic activities to channel our economic productivity in the right course, exacerbated by insecurity situation. And why I say that the domestic challenges more than the international challenges is because you recall that in 2005, 2006, global economic meltdown, which started in 2004, Nigeria did not witness it, simply because we had robust savings in our external reserve, and we had savings in our oil revenue, the one we call the extra revenue that we earn from oil, which we save. But the very moment the governors attacked the federal government then and insisted that such revenue should not be kept, that it should be brought out and shared at the Federation Account Allocation Committee, Nigeria's surplus oil resource earning and savings dried up. And that invariably affected our general price increases. So you can see that we were by international problems and more by domestic challenges.
All right, Barrister.
Domestic challenges of lack of savings, poor economic management, poor economic policies, unbridled corruption and stealing of wealth of the nation at all levels of government. All those things will add up to the stagflation and the terrible situation we have today.
All right, Barrister, COVID was the first line of defense for the inflation. Is this not a weak excuse?
Well, it was just one of the defense lines which the government is clutching on. And the government is comfortable clutching on COVID because they know that COVID is of international dimension. Every other problem that heightened the level of inflation are domestic. And if you now look at all those ones which I had highlighted, then the government and government officials will be found culpable and complicit and in its failure situation. So on the side of self adulation and self-praise, government will very easily hold on to COVID as the cause. The government will not look at other challenges with their cause for the economy and for the system. And I can tell you that if you put the two issues, international and domestic, on the scale of balance, the international one will take 30% and the domestic one will take 70%.
All right, Barrister, thank you so much for joining us. Thank you so much.
Many thanks.
All right. The ambassador of Ireland to Nigeria, Peter Ryan, has reiterated Ireland's commitment towards deeper technological exchange with Nigeria. Peter Ryan also said that through the European Union and Ireland's work in Nigeria, they are contributing to the development of more prosperous, secure, and safe Nigeria. He said this during the ambassadorial forum held by Nigerian Institute of International Affairs, NIIA, themed Nigeria-Ireland relations yesterday. He stated that there is a huge opportunity for progress in Nigeria, adding that Nigeria's journey somehow reflects theirs as an independent nation. Saying that Nigeria is the largest African diaspora in Ireland, he said the nation has seen an increase in the new generation of Nigerians, especially in their business and cultural space, and Ireland treasures and intends to nurture them. Speaking on peace, he emphasized that the world cannot address global challenges, conflict, climate change, and food insecurity without an effective, robust United Nations Security Council. Also, he said the Security Council remained a pivotal institution at the heart of the multilateral system. Director General NIIA Professor Egosa Osage said the Ambassadorial Forum has been created to deepen the arena of cooperation, association, and relationship between Nigeria and other countries. He added that from the dialogue, one could expect that the relations would expand and be strengthened at every level. The governor of the Central Bank of Nigeria, CBN, Godwin Emefiele, has urged telecoms firms and deposit money banks to consider the interest of financial consumers in their dispute over non-payment for the provision of the unstructured supplementary service data transactions. Emefiele made the statement on Monday after launching Sabi Money e-learning platform, a financial literacy digital platform for e-learning. For over 3 years, telecoms firms have tackled deposit money banks for not paying for the usage of the USSD platform, which enables bank customers to use short codes to transfer funds and check account balances, amongst other financial transactions, without an internet connection. The USSD debt, which has accumulated to 120 billion naira, has once resulted in network providers blocking some bank customers from accessing the USSD services before the intervention of the CBN and the regulator of the telecom industry, Nigerian Communications Commission. Recently, another disagreement ensued between the banks and telecommunications, leading to the intervention of the CBN to avoid a recurrence of customers not having access to the USSD services. Speaking about the dispute, Emefiele said the central bank would ensure the disagreement is resolved amicably. The International Monetary Fund has said the weaker currencies in Nigeria and other sub-Saharan African countries are pushing up public debt. This was disclosed in a post published on the IMF's website on Monday. The fund noted that with an average depreciation of 9% since January 2022, sub-Saharan African currencies have weakened against the US dollar. The IMF further noted that the depreciations were mostly driven by external factors, adding that lower risk appetite in global markets and interest rate hikes in the United States pushed investors away from the region towards safer and higher-paying U.S. Treasury bonds. While noting the high import cost in 2022, the IMF added that the large budget deficit had compounded the effect of those external shocks by increasing the demand for foreign exchange. On the implications of weaker currencies, the fund identified inflation and higher public debt. The Manufacturers Association of Nigeria has said that the recent increase in excise duty for beverage and tobacco goods will force businesses to scale down operations, which will result in factory closures, job losses, and a decline in exports among negative trends. MAN President Francis Messioye stated this during a press conference held in Lagos to raise objections in recently published 2023 fiscal policy measures on Tuesday, noting that the excise duty hike is a flagrant reneging of a promise made to the association by the federal government through the Ministry of Finance, Budget and National Planning on March 23, 2023. He said the exponential increase in excise duty in the 2023 fiscal policy measures came as a shock to the industry and was in effect an increase on an increase since there was already an approved increase in place for 2023. Messioye said the increase was coming at a time when the manufacturing sector was immersed in unprecedented crisis and an acute recession due to extraordinary challenges, namely sustained scarcity of naira, limited access to foreign exchange, high inflation, and a struggling economy. According to EMEFIELE, the brewing sector, which would bear the brunt of the excise duty hike, suffered a massive decline of minus 169% in profits before tax in Q1 2023. He added that the industry turnover for non-alcoholic beverages and tobacco declined by minus 15%, while gross profits and profits before tax declined by minus 31% and minus 96% within the same period. The federal government has advised the incoming administration of President-elect Bola Ahmed Tinubu to strengthen anti-corruption and reform-minded agency to effectively contribute to robust economic and public finance. Speaking in Abuja on Tuesday at the unveiling of the Gender and Environmental Reporting Frameworks for Nigeria's oil, gas, and mining sectors, the Minister of Finance, Budget and National Planning, Zainab Ahmed, said anti-corruption agencies were well positioned to guide and shape government's policies. This came as she stated that the latest frameworks put together by Nigeria Extractive Industries Transparency Initiative would help in resolving the negative impact of oil, gas, and mineral exploration in host communities nationwide. Kaduna Electricity Distribution Company risks losing its operational license due to the company's 51.93 billion naira debt. KAEDCO has received a notification from the Nigerian Electricity Regulatory Commission (NERC) on Monday informing the company of the intention to cancel its license. According to reports on Tuesday, KAEDCO has incurred a debt of 41.49 billion naira between 2015 to 2021 owed to a Nigerian bulk electricity trading PLC and the market operator. In 2022, the Kaduna Disco also incurred a total liability to the tune of 51.93 billion naira to NBET and MO, totaling 93.41 billion naira debt from 2015 to 2022. NERC said it had reasonable cause to believe that KAGDO had breached the provisions of the Electric Power Sector Reform Act and the terms and conditions of the electricity distribution license. The NERC gave the DISCO 60 days to resolve its debt issue or face termination of its license to operate. This comes weeks after Kaduna Disco was disconnected from the national grid by the Transmission Company of Nigeria before it was later reconnected. And that's a wrap on VOP Business. I am Kayla Abraham. Thanks for watching.